Hi, welcome. It's Mary Ellen McGonagle with your Daily 5 for December 1st, 2022. To begin, I'd like to share a bit of information about my background. I do have quite a bit of experience both on and with Wall Street. Started my career on the trading floor at Goldman Sachs, and from there I did go on to an asset management firm in New York City where I managed over $2 billion in assets on the fixed income side. Things really got interesting for me on the equity side, however, when I joined William O'Neill & Company and traveled the globe working with top portfolio managers and analysts, advising them on the broader markets, as well as teaching them that O'Neill methodology about how you can uncover these stocks that go on to far outpace the broader markets. From there, I did found my own research firm, MEM Investment Research, that's being powered by simplertrading.com, the author of a top-performing MEM Edge report that you can find out more about by using the link below. I want to talk about the concept that macro events can really drive price action in the markets, and we did see that today. Let's take a look at some of the more powerful drivers. First up is the fact that interest rates do have a powerful impact on select areas of the market. Lower interest rates are good for stocks, and in particular for growth stocks. Also, global events will drive price action. China has been in the news an awful lot here of late, and I will share with you the impact of their COVID lockdown and the potential of reversing that lockdown on stocks. I'll share with you an idea from there. Also, industry groups that rotate in or out of favor, and I will share with you some of the more relatively outperforming areas currently in the market. You do want to be aware of that because industry group and sector selection among your stocks can have up to a 50% impact on the price of your stock. So here we are with the daily price chart of the S&P 500. And yesterday was a very potentially pivotal day as the S&P 500 broke back above this 200-day simple moving average. It did so on very big volume. And the reason for that is because of Fed Chair Powell's comments that the Federal Reserve will consider not raising rates as high up a percent as they have been recently. I mentioned that lower interest rates are good for the broader markets. From here, we can take a look at the momentum indicators here. The RSI above 50, trending higher, and your stochastics also above 50. So we have positive momentum with this price break above this 200-day simple moving average. We did have what's called a follow-through day about 2 weeks ago when we had that weaker than expected CPI report. And this is another O'Neill methodology characteristic that has identified every market bottom. But in some cases, those market bottom potentials do not always pan out. It can be just a bear market rally, which I am considering it still at this point in time, but it is a rally and a new uptrend nonetheless. Of note is that today, before the markets open, there will be a pivotal inflation report, the core PCE. So depending on those numbers, if we see an improvement where inflation is being lowered, we could see a nice continuation rally take shape here. So with that in mind, I will share with you ideas from these stronger areas in the markets. So here's a 2-month daily price chart view of several ETFs that I find to be really quite useful to stay on top of. And I've sorted this list by RSI. So up here in this upper left quartile are your stronger areas. And then in this quartile on the right lower side are your weaker areas. So first up, let's take a look. The Dow Jones Industrial Average has been one of the strongest areas. Quite simply, there has been a flight to safety, large cap names that are offering yields. And in this instance with the Dow, they also offer growth prospects, have been on the rise. Next up here are biotech stocks. IBB is the ETF, and this group turned positive at the end of October. My MEM Edge report noted that and did get us into several stocks, and it is continuing to show superior outperformance with today's rally. Next up, we can see gold stocks up here at the forefront. This particular group is an area that is and has been impacted by news out of China. There is talk that they are easing their COVID lockdown restrictions. I'll share with you a metals stock, not gold, but another area that can benefit from that news. Also, semiconductors up here at this potential forefront here as they move back into favor, up 6% yesterday, and there are bright spots there as well. Retail XRT, that's the ETF for the S&P retail area, and it's also on the move. This is an area that I will share a couple of names with you as well, as a number of these companies have reported their earnings over the last couple of weeks. Down here in the weaker area, we can see this is the interest rate decline. I mentioned the impact that that can have on growth areas such as semiconductors and retail. Also, we are seeing the US dollar stabilize, and that's another big impact on the broader markets. So first up, I am going to share with you a metal stock, and this is SLV, the iShares Silver Trust ETF. And we can see that on 4.5% rally, this SLV ETF gapped up in price into a base breakout, and it did so on very big volume. China is one of the largest importers of silver, and the idea that they may be lowering their restrictions for lockdowns are quite bullish for the group overall, as is the move of this group above this 200-day simple moving average on quite big volume. Next up is a retailer. I talked about that move into XRT, the ETF. This is Skechers USA. SKX is the ticker symbol, and the stock has a lot going for it technically, and you can see that it fell in line with other areas of the market, particularly growth stocks, but more recently it has been in a very nice confirmed uptrend. The stock experienced a 2-day gap up, pushed this stock up above this 200-day simple moving average. From there, it did have about a 2-week period of consolidation, a back and fill period, but yesterday the stock experienced a gap up out of this flat base, and it had very big volume with your outside momentum in positive territory. The stock looks quite bullish. Next up is another retailer, and it is something of a competitor to Skechers, and that's Deckers Outdoor, DEC, best known for their UGG boots, but they also have a very profitable sneaker division as well. So let's go back and take a look at this gap up into a base breakout. This took place during the broader markets follow through day. Super big volume on that gap up base breakout, and from there Deckers has been pushed into a very nice uptrend where the stock is finding support at its upward trending 5-day simple moving average with its outside momentum indicators in positive territory. Next up, I am sharing with you a biotechnology stock, NBIX. And this is another company that already released their earnings, and the company did have a nice move up here in response on very high volume. And subsequent to that, we did see a pullback in the stock. However, it did find support at this upward trending 50-day simple moving average. And yesterday's rally occurred on very big volume and pushed the stock out of a base to a new high. We have this nice MACD crossover, black line up through the red, indicating a new uptrend, and then a positive RSI characteristics as well that make this stock quite attractive. That is it for today's Your Daily 5. Thanks for watching. I'll see you again here real soon.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.